Hi students, welcome to Vijayata IAS Academy editorial discussion. In this video, we discuss about an issue related to GS3 economy. It is related to states borrowing or giving loans to states by the center. This issue is highlighted in the editorial of Indian Express. In today itself, there is another opinion also from former Governor of RBI, C. Rangarajan. He highlighted some of the issues related to budget and economy. One of the issues is related to borrowing, state borrowings. So let us see what is the issue and what are the various issues discussed in this editorial. The contents of this editorial will help you in giving answers like this in mains and prelims. If you take mains question, here question can be, do you think the proposal in the budget of the center to provide an interest-free loan, you can see the keyword interest-free loan, for a 50-year period needs re-examination? Do you think this proposal needs re-examination? So that is the question. Some of the contents can be used in writing answers like this. And with respect to prelims, here in this article, you will find some of the potential prelims related topics like Finance Commission, Article 280, Article 293, Capital Expenditure, Revenue Expenditure, Loan versus Grant. So let us see what is the issue and what are the various other challenges or dimensions involved in this. This is saying that Union Budget 22-23 provided for 1 lakh crore rupees in loans to state governments to enable them to increase their capital expenditure. These are to be interest-free, repayable after 50 years. So now you can think this. State government will provide a loan to states where states need not to pay back for 50 years. They can use the loan amount for capital expenditure. So these are the key issues in this. So 50 years, states will have complete autonomy in taking the loan and using that loan for capital expenditure. So now what is capital expenditure? An expenditure which is used for assets creation, which will generate revenue further. So here comparing with revenue expenditure is something which is for day-to-day administration, which will not generate asset as it is. So like salaries, pensions, payment of interest for the loan. So these are the examples of revenue expenditure. Once they are gone, they will not come back or they will not create assets. When it comes to capital expenditure, they have the potential of creating more revenue in future. For example, if you take sector wise, if you take health sector, constructing hospital is part of capital expenditure. It will increase the well-being of people, health of the people, and fit human resources will enhance the growth of economy. And if you take education sector, again building human resource is part of capital expenditure like school buildings, colleges, universities. And similarly in case of roads also, in case of industrial plants or any such kind of expenditure which is having the potential to generate more revenue in future. However, it needs a lot of amount to invest in the beginning, but in future they will reap the benefits. So that's why you need time to get the results out of capital expenditure. So this is the philosophy behind this particular proposal. 1 lakh crore rupees setting aside in the budget or over a period of time, and they can be given for states and they need not to pay for 50 years. They can use that amount for a capital expenditure, generate the assets and get the development and get the benefits out of this capital expenditure. And these are also interest free. This is another important aspect. What happens generally is if state or central government borrows from market or any multilateral agency, most of the amount goes back to interest payment every month or every year. So this interest payment is part of revenue expenditure. So additional burden on states. On one hand, borrowings are coming, but again they are going back in the form of interest without being utilized for capital expenditure. So that's why this arrangement is interest free also. So states need not to worry about interest also. So they can fully utilize this for capital expenditure. So now this is the proposal. So it appears that it is a very good proposal, gives a free hand for the states to use these loans and for development of the states. However, there are certain issues, and here major issue is about the center states relation. So this article is highlighting concerns about it has this particular clause is having potential for contention between center and states financial relations. So here it is saying that some states have expressed apprehensions, arguing that such an arrangement raises larger questions over the framework that governs center state fiscal relations. Around Article 293. So this is very important. Article 293 deals with center state fiscal relations. So according to this particular article, it is saying that without the consent of the government of India, so that is union government or central government, states may not raise any loan as long as there is still outstanding any part of a loan which has been made to the state by the government of India. So this proposal, now you split this one. Constitution itself is saying that a state is there. Now center, state. If there is any pending amount or state borrowed money from the center and without repaying this amount, if states want more borrowings from the market or from any other means, it cannot borrow the money without taking consent of the state or without taking permission of the central government. So this is like that. Now if a state takes loan from this arrangement, now states now for 50 years now they have the obligation to repay this loan. Now if they want additional borrowings from any other means, now it should go back to the center and take the permission to get the additional resources. So this is the word. So now the autonomy of states is at risk according to this particular opinion. So Article 293 of 3 is saying that as long as states may not raise any loan, as long as there is still outstanding any part of a loan which has been made to the states by the central government of India. So here a state can take loan from center, but now for 50 years, now state is locked with this particular amount. Now center, without center's permission, a state cannot take additional borrowings. So this is constitutional provision itself. However, in recent trends, there is some good trend is going on. So here it is saying that states are gaining a degree of freedom in this respect. But over the past decade or so, union government has done away with the loan component in the central plan assistance. So earlier loan component was there. Suppose if loan is given to a particular state, then unless loan is cleared, now states will not get permission for additional borrowings. Earlier loan component was more comparing with grant component. Now what's the difference between grant and loan? Grant means states need not to repay. When it comes to loan, states need to repay that particular amount. So that is the difference between grant and loan. So here loan component in the central plan assistance is coming down gradually. States' liabilities towards the center have in fact been declining as per 15th Finance Commission. So 15th Finance Commission also highlighted that this trend is declining. So now with respect to prelims point of view, you can see what is 15th Finance Commission. First of all, Finance Commission, what is the article of Finance Commission? So Finance Commission, Article 280 of the Constitution. 15th Finance Commission under N.K. Singh it was appointed. Now it was appointed in 2017 for period of 2021 to 22 to 25 26. So this is the 5-year period which 15th Finance Commission is applicable. So those things you can think about prelims. Thus, over time, states would perhaps not have any obligations towards the center, increasing their degree of freedom. So if this trend continues, if center is giving more part of grants, not as part of loan, then states gradually will gain the freedom and they can take the decisions to borrow money in future whenever they require it. So this is the positive trend that is going on for few years. Now budgetary proposal. Now article is saying that now with this particular budgetary proposal and constitutional provision also, more powers to center over states fiscal management at a time when it had been decreasing. So this trend is saying there is a declining or increasing the freedom of states. Now with this budgetary proposal and constitutional provision combination, this again states may lose this autonomy with respect to financial space. So this is what this article is highlighting. Treatment of loans from, there is another angle also where states need to take the permission of states or where center has the say with respect to finances of states. Treatment of loans from multilateral agencies to states being routed through the center, something that will not end in the foreseeable future. So even if states go for multilateral agencies like World Bank, the amount comes through center. So that means the center is involving once again in the states borrowing. So this trend also will continue. Now read all these three issues: taking loans from multilateral agencies, constitutional provision, and this budgetary proposal for 50 years lock-in period. Now all these combinedly, there is apprehension that states, the autonomy in the financial space or fiscal space for the states is affected. However, article is saying that there are some positives also. They are saying that greater support to states because 50-year period, interest free. So generally most of the amount goes for interest payments every year, but now interest free. They need not to worry about interest, and for 50 years. That means they can utilize this amount for capital expenditure, and 50 years means these capital expenditures also may generate assets once again. Now overall states economy is pushed, so states will be in a good position to repay this particular amount after 50 years. So greater support to states is necessary in terms of fiscal flexibility, especially during periods of crisis. For example, if you take for the last 2 years, COVID has demolished the economic condition of most of the world. So in this kind of crisis, this kind of support will help the states. Center is responsible for the country's overall macroeconomic stability as well. So these 2 points, now this kind of proposal may bring stability for the overall economy. However, only concern is about interference. Possibility of conditions being attached to these loans. So loan may come to states for 50 years, interest free, but will there be any conditions attached to this particular loan? Will the center's expenditure priorities match those of the states? Now another, once money is given, now states will have certain priorities where it wants to spend, and center may have certain kinds of vision for the future. Now will it match? If they don't match, what will happen? So it becomes contentious issue between center and states. Amount not being transferred to states in the form of grant. It's not a grant, it is a loan. So it is shown in the not shown in the revenue expenditure, while loans have been shown in the capital expenditure. So this is for prelims exam. So this comes as part of loan, not as grant. That means center will have additional, states will have additional burden. Still, states will have the autonomy. Now states can have 3 type of options. So this article is highlighting that finally states will take the call. Here it is saying that states politically aligned with the center may accept it. Those who are in center, if same party is ruling at the center and state, those states may take the loans. States whose finances, if a particular state is completely burdened with finances, then they may go for this particular option. It is equally possible that some states may not borrow. So it is completely the decision of states whether to borrow it or whether not to borrow it. They are within their rights to deny the loan. So it is not imposing, center is not imposing anything on states. So it is completely with states. Now finally, conclusion is potentially contentious political issue. It is saying, considering the current environment of distress, already some news is going like the differences between governor and state chief ministers, and growing tensions between center's imposition on certain aspects with respect to states, where fault lines in center-state relations have deepened, an arrangement that states view as impinging on their fiscal independence or as an attempt towards greater centralization may become a deeply contentious political issue. So this editorial is highlighting that fiscal independence and greater centralization. So the prehension is that states may lose fiscal independence and greater centralization may take place. So conclusion for this kind of problem is, in our answer we can write, if these two challenges are addressed, then this particular proposal will be a good option for the state's development and also overall economic growth of the country. So this is about this article given in Indian Express. Thank you.